1.6 billion in liquidations. Unfortunately, we start today in the red. Obviously, the biggest liquidations were on the longs, given that we saw a big drop in Bitcoin and the altcoins followed. Especially here, we see ETH in the red, where $10 million were liquidated. But we will take a closer look at the overall situation, the bigger picture in the next slides, and how the Fed could influence this end of the market, anyway, this end of the year and this end of the bull run, and why it's not all negative as people think right now in terms of general sentiment. As we said, the Fed a few days ago confirmed the rate cut for October of 0.25, but what went unnoticed? What they wanted to make go unnoticed? And it's also true that the Fed declared, Jerome Powell declared that in December another rate cut is not certain, even though he will probably, quote, be forced to do it because Trump will push heavily on this since he wants strong markets during his term. But what went unnoticed was that the Fed injected almost $30 billion of liquidity into the banks in a single night. And this, in addition to Powell's statement about stopping QT, is a great signal because these dollars could very well enter the market and provide more liquidity in the future. Looking at the chart, we touched a key level, which is around $100,000 for Bitcoin, even going down to $99,000. And now we are inside this micro range that goes from, well, $100,000 up to $106,000. But we could, as we saw before, go around the liquidity levels found at 110, between 110 and $111,000. Here, I'm interested in long positions. In that case, I would take a short briefly, not on Bitcoin, because regardless, I didn't pick Bitcoin, but we'll look at the Ethereum chart, where we see a Fibonacci level where we touched $3,200, a key level also for Ethereum, and around the second Fibonacci level, around $3,900, where there was a lot of liquidity. As we saw before, I would be interested in short positions, obviously in the short term, and then maybe do a kind of bounce downward to capture some liquidity and then go back toward higher levels, possibly surpassing $4,000. If we also look at the S&P 500 chart, which mostly drives the markets, Bitcoin often follows it too, we can see how we closed, or rather narrowed, that gap that appeared a few days ago, which was created on October 27th to be precise. So this drop in Bitcoin and the crypto market was also due to the main US market needing to close this gap, because remember, the market rarely leaves gaps open for too long. Anyway, it tends to close them, and we're also at a good support level, which are the previous highs made about last month. So we're not in a bad position at the moment. The same thing on the Nasdaq. We closed a similar gap that we had on the Nasdaq. And here too, we are at support levels of the highs where we had fallen and then recovered. So the market situation right now suggests a recovery. With that, I'll say goodbye. And I recommend always staying updated from me or other channels, because this can make the difference between losing or making money in the market. See you soon.